Good afternoon, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is Sunday, August 19th, 2012. Lots to talk about, so let's get started. So this video will be based on stock picks. I don't see very many. I mean, most stocks are already into pretty major resistance, but I want to try and pick the best case scenario simply because the volume has just been so low. Until we can get volume back into the market, it's going to be really hard to tell what resistance levels are going to get hit. But the more extended stocks get, the bigger the fall is normally the case. Okay, so just something to be aware of. Now, this chart is the DIA, which is the spiders for the Dow Jones Industrial. This is something new that I'm trying. I normally don't read these charts because I don't follow the Dow Jones. Because the Dow Jones are simply they monitor 30 stocks versus S&P is 500, so you get a better idea of how the markets will work looking at the S&P 500 rather than the Dow Jones. However, the Dow Jones is a big part simply because it does deal with the more of the stronger stocks, meaning the bigger companies like the Apples and so on and so forth, So the thing about this is, real quick, I mean, this is supposed to be a stock video, but I just wanted to bring this to your guys' attention that I did some calculations, and I do have a calculated level here at 133.50 and 138.86. These levels here, plus we have these trend lines that I've drawn since last year, from this pivot point here to this pivot point here, and then possibly maybe another pivot point there. That is not going to be as valid, however, as this pivot point here and this pivot point here, which goes and coincides with the 138.86. I'm not saying it even gets close to 138.86. All I'm saying is until the volume gets back into the market, this could still be potentially an issue. I mean, today is the 19th. We essentially have 2 more weeks before we get into September. And normally September picks up in volume, but August isn't always a low volume month, but for the most part August is in general a low volume month. As we get towards the end of August and the start of September, we should theoretically see a lot more volume come into the market as traders come back in and start trading again. But I just wanted to show you this. For now, I'm just going to go down the list of stocks that I kind of looked at. The first one I wanted to talk about was VMware here. Alright, so we have a calculated level here on VMware at 104.41, and this is provided the market continues to have low volume and we could potentially get up into this level here before having a pullback. It is also coincided with the 618 Fibonacci retracement, which is supposedly the strongest of the Fibonacci levels, supposedly. Okay. Alright, let's see here. This is a chart of JP Morgan. Let me just switch to the daily chart here. Okay, on JP Morgan, we have what we have. We have this somewhat of a triangular pattern here. This could also be considered a smaller triangle here. And normally triangles, when it's symmetrical, such as this one, the breakout can be either up or down. And we're pretty much towards the end of the triangle already. I did have a mathematically calculated level here at 37.34 on the day of August 3rd. We've went into there a few times, just once, twice, and then a third time, and we're just kind of riding on there. But just keep in mind that if I just stretch this out a little bit, this kind of looks like a dirty, bullish consolidation pattern. So just be aware that if JP Morgan, because it is the leader of the finance market, if JPM catches a bid, then there's a possibility that the markets will catch a bid as well. So just keep that in mind. I do have on the next level here, which I would be very interested and probably will be taking a short at $40.59 if it can get there. All right, the next one on my list here is the JJC. Yeah, so I had these levels in here a while ago. I still have this level here, which is around the $44-45 level here. Probably I could take these trend lines out already. I don't really need them anymore. But essentially, we're in a pretty big, how should I say, bearish pattern here. Okay, so just keep that in mind. Let me switch to the weekly and see if we can see anything on there. Yeah. So basically, we have this down move. Whoops. Let me just zoom in here. We kind of have this down move here. It's kind of choppy and sloppy and not really anything good, but we have this. So we have a longer term bearish consolidation pattern, bear flag, or somewhat of a bear flag, and we have this little tiny bear flag here too. If you notice that we had this down move, and then, well, actually before that, okay, so let's just take a little bit look here. We came down here, we went up, and then we bullishly consolidated. That failed. We came back down, and now we're consolidating again. That could potentially cause more of a downside, or more of a bearish pattern on the JJC. So that kind of negates what is looking well. So okay, if we get into this level over here, then it wouldn't be unheard of, or it wouldn't be surprising that we'll get a pull back off of that level there. And we also have these two levels up here that coincides with this. So that's definitely a possibility. And let me see if there's a Fibonacci retracement here. Let's grab the top. Let's come straight down. Yeah, nothing there. Let's grab that pivot top there, and then come straight down to over here. Yeah, that's a little bit more like like around there. I mean, I don't like to play with the Fibonacci retracements too much, but the farther out I go, I like to think that that's how much longer it's going to take for the Fibonacci retracements to play out. But anyways, that's the JJC. Let's move on. Alright, this is daily chart of gold, or GOD, which is the ETF that tracks the gold, or tracks gold, and we still have these levels over here. One up here and one down here. So this is basically telling me we're just trading sideways right now on the GOD. Okay, we could actually, now that I look at it, we could be creating somewhat of a symmetrical triangle here. Yeah, look at that. All right, so we're close to breaking out either way, either up or down. So if that's the case, let me take that out, then if we break up, then this might be a good short up here, at least for a day trade. Let me take a look at the weekly here. Yeah, I don't see anything really good except the 50 moving averages up there. Yeah, it wouldn't be a bad idea, but I'd have to look at it the closer we get to that level over there. Alright, this is the daily chart of ABX. So I have this bunch of calculations here that was made on 7/13. We're coming right into it now, but we'll see if we get a pullback off of this. I'm probably not going to take a trade on the ABX chart just based on what I'm looking at now. But I'm just curious to see if we're actually going to get a pullback off of those calculated levels here. Again, I need multiple factors or multiple indicators telling me that I could potentially be into resistance or support. Right now, the only thing is telling me that I'm into resistance is my mathematically calculated level, which, even though it's been working out pretty well, I mean, it'd be nice to have something else weighing on it to tell me that there is a possibility that we may have somewhat of a pullback on that level there. So let me just see if there's a retracement here. I guess it's kind of close to it, but again, I'm taking the retracement back on this pivot point here all the way down here, so that could be kind of on the finicky side. Me personally, I really don't. I use Fibonacci retracements just as a confirmation, nothing else. I would never make a trade just based on the fibs. I do know a lot of traders that swear by the fibs, but I'm just not one of them. Right, here's a daily chart of Bed Bath & Beyond, code BBBY. I have a mathematically calculated level up here, which is about in the vicinity of $69.39. I can't really see it with this fib in the way. You know what? Let me just delete the fib here. Alright, $69.39. We do have a Fibonacci retracement level right there, which is the 618. In addition to that, and this is what I'm talking about, multiple factors. Okay, let me just delete all. Let me just not delete all the drawings, just delete the fib here. Multiple factors in that we also have a gap fill level here. We have a Fibonacci 618. We also have a mathematically calculated level, which is 69.39. So maybe I might take a trade at 69.25 or something like that, just to make sure that I'm in on it. And then of course we have the Fibonacci 618 over there. So if we can catch a bid on low volume and all the way up there, get into this resistance point, then yeah, I'd be thinking about taking a short. Sorry, I did say this was a gap fill. My apologies. This is actually the gap fill here, all the way up there. This, however, is a pivot point, a pretty substantial pivot point here, which could mean that we could get a somewhat of a reversal off BBBY. So just keep that in mind there. I know I said that was a gap fill, but it wasn't. We also have this. This is a gap fill all the way up here, which coincides, but it's already been used. So I don't really like to look at that, but it's definitely going to be an area of resistance for BBBY. Oh, another stock that I kind of like is C, which is Citigroup, as a short. The only thing I don't like about this is we had to move up here, and we're kind of close to this upper level here, but we're kind of already consolidating. And anytime I see consolidation right below a level, kind of looks like to me that it may want to continue higher. It's kind of like building up steam, right, to push through the ceiling. The thing, however, though, with Citi is that we are or will be into somewhat of a gap fill area here. We're at the 200 moving average, and I have a calculated level here at 29.98. Okay. All right, this is a daily chart of Caterpillar. Let me just switch to the daily here. Sorry, that was the weekly chart. So let's see. So I had these calculated levels already made, and the Fibonacci retracements kind of just line up with it, except for the first one. Calculated level here at 89.15. We got that pullback. Let me just zoom in here. We got that pullback right when we hit that 89.15. We actually pulled back, so that level is already used, right? Remember, use and abuse levels are levels I don't concentrate on anymore. So it hit it once, came back down, and it broke through it. So the next level for Caterpillar is here before taking a short, and then of course ultimately if it can get up to the 97.73 level, then I'll probably take a short there. Let's just take a quick look at the weekly here. And it's also at the 50%. Oh well. Yeah, it's the Caterpillar chart's not that strong actually, but it's just something to keep an eye on, just to see if these calculated levels are going to hold up or not. This is another chart. Now here's this is going to be basically specifically a test. Okay, these mathematically calculated levels, they don't work around earnings, but you know, we obviously don't see earnings on this charter. But even if this was some sort of earnings or bad news or whatever the case may be, and you know, earnings is news, and that's when a lot of emotion is involved in a specific stock or ETF that causes you know, a big turn either to the upside or downside. But that turn happened here. Okay, this probably would have given you an idea with the doji candle, and you can see a little bit of a higher volume since the past 5 days here, and that should have told you that it probably would have gotten some sort of a reversal. It got actually a huge reversal down, and this is what you call a falling knife. And a lot of people say it's very dangerous and risky to catch a falling knife. So yes, it is. I do agree with that. But I did, for fun, put in these two calculated levels here, which is 51.15 and 49.08. These levels here are to go long. So if we can tag these levels here, then I may actually go long this stock. In addition to that, we have this rising trend line here. Okay, and then we have this rising trend line up here. So you know, we hit this trend line up here, and then we got a bounce off, and then we'll see if we get a bounce up off of this trend line here and this mathematically calculated level. If we break down through that, then let's see if the 49.08 holds up or not. Again, these are just calculated levels, and I just want to see if they're going to work with falling knives, because if they do, then there's a lot of money to be made with falling knives, obviously, because you know, those things a lot of people try to catch and a lot of times fail. But if these calculated levels actually hold up, then I may actually use that to take a bigger risk, obviously, but you know, and the bigger the risk, the smaller position I take, so it's not going to be as bad. But anyways, I just want to keep an eye on this this one here. All right, this is a daily chart of CPRT. Okay, so I have a calculated level here at 26.49, and it's pretty close to this gap window over here. So you know, there's a possibility that we may have some pretty good resistance around this area here. So just keeping your eye on CPRT for short, and you know, with the markets the way it is, we may actually float into here. And you know, get a small pullback before potentially even going higher, depending on if we can get volume back into the market. All right, this is a chart of Ford, letter code F. Ford has went into this $9.74 mathematically calculated level. We created this doji candle. Sorry, this shooting star candle. The shooting star candle didn't happen on substantial volume, so I wouldn't really consider that a reversal as far as just looking at the candle. But we are into this mathematically calculated level, and we already did get a intraday pullback on that level. So the next level that I would be interested in is this $10.40 14-cent level before taking a short on Ford. And there would be a possibility that Ford may pull back around this area at the same time as the markets should be pulling back, and that's if the markets pull back. All right, a lot of times I say that the mathematically calculated levels work pretty well, right? But you know, again, I'm not one of those people or institutions that want to take your money or services, because I just want to show you that these calculated levels do fail. Okay, Facebook, I did this calculation here on August 3rd, came down, well, went up almost into this level. It didn't quite get there, and I mean, it was pretty far off. I mean, the high of this candle was 22.45. This calculation here was, let me just delete any one of these lines just to see, it's 23.04. So that's over a, what is that, 23, so that's over a 50-cent difference, which is a big difference, okay, especially on a $20 stock, right? Come back up, we tried to get back into this $23 level again, but couldn't make it there. So yes, these calculations, they don't necessarily work 100% of the time. And again, if it had gotten into this level, then I probably would have considered taking a short on FBI. I really like this level a lot better, but we'll see. I just want to show you how it sometimes doesn't work. Another scenario of this calculation is that I created this 132.08 for BIDU on the day of August 3rd. And BIDU went right into here, had an intraday pullback, right into the level again, right into the level again, right into the level again. I mean, you can check the previous video when I made this calculation here. You could see that I actually calculated this level almost to the penny. The high of this was 132.08. Actually, it was the penny. I mean, if you look at the high is up here. The high of this candle, which is the first candle that came into this level, was 132.08, and this is 132.08. So that's pretty cool. I mean, it's always nice to see it hit to the penny. But then what happened was it went right into this mathematically calculated level, and again, once it's hit, I don't consider it a valid level anymore. In any case, all we did was we consolidated right under this level. You see, that's what I mean by consolidation under a level, and it builds some steam to push right through it. And then what happened was we came back down, retested this 132.08. The low of this candle was 132.19. So we came back down to retest this 132.08, and there is a potential that we could go higher. Again, it really depends on the volume, but I don't have any other levels here. I just kind of wanted to show you that these levels aren't like, once it hits a level short. I mean, yeah, it's been working pretty well, but I just never know if it's going to be a day trade or a swing trade type level, and that's why I like to include other, other indicators or factors in there just to increase my chances of being right in the move that it should be making. But obviously from this here, after I see a consolidation period being made, I probably would have gotten out for a small profit anyway. So I just wanted to bring that to your attention. But the last stock I want to talk about, because I'm already running out of time, is probably my favorite one that I've seen so far. Is saved the best for last, and this doesn't necessarily mean I'm actually going to take the trade again. I'm already short the market, so to be honest with you, I don't want to overload on anything with the volume the way it is. So last but not least, let's check it out. This is a chart of Bank of America, BAC. I have a mathematically calculated level here at $8.13. The high of this candle was $8.12. Yes, granted, I made the calculation here on this day, which was today, so I really missed this trade. But did I really? Not necessarily, because it created the shooting star candle. It's into pretty good resistance. It has this $8.13 mathematically calculated level there. But if you look at the volume here, this shooting star was made on pretty good volume. I mean, since the past these days, let's see, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 days, the past 14 days, okay, has been it has on Friday the most volume since the past 14 days. And we could potentially go up here where we have level 2 pivot points over here, some levels over there. And let me see if there's anything in the weekly that looks good. Alright, on BAC on the weekly, let's kind of see here. I don't see anything really good on the weekly here. Actually, I don't see anything good at all on the weekly. Let me just move this up. Whoops. Yeah, I don't really see anything substantial on the weekly here, but this is the best out of all the picks that I've seen, simply because we have this candle pattern here, which indicates a possible reversal. It's the tail isn't as long as I'd like it to be, though. Okay, just keep that in mind. Sometimes I do have tails that look really good, and obviously volume. If I had volume like this, then yeah, then I'd be like, I'm taking the trade on Monday. Okay, but what I might consider doing, because it's such a cheap stock, I'm gonna consider. I may not actually pull a trigger just because the volume isn't there. And again, you never try to short a dull market, and right now we're in a dull market. We just don't have the volume. If we can get back into this $8.13 level, or at the $8, the high of this candle is $8.12, I may consider taking a short trade, maybe even halfway, so maybe around the $8.05 level or 10-cent level or something like that. I may consider taking a short trade. And what I would do is any close above, and I say close, not confirmed, and the confirmation is I don't want to use confirmation in this case simply because the volume is too low right now. Okay, so confirmation really is not going to matter because we're going to confirm till we go blind, because it's the volume's just not there. So any close above this candle here, I'll probably stop out for a small loss. And it's an $8 stock, so the loss isn't going to be a very big very big loss, and my entry wouldn't be a very big entry either, simply because I am already short in the market, so I don't really need to be short anything else. I don't want to overload. Again, money management is the most important thing. In any case, that's pretty much all I have. Thank you very much for watching. God bless to you all, and good luck. Hope to see you in the next video.